Welcome to our deep dive, everybody. This time we're taking a close look at the State Bank of India. We've got all their reports and disclosures right here, and we're going to really dig into their recent financial performance.
Yeah, what's always interesting with SBI is how their performance kind of reflects the Indian economy as a whole, you know?
Right.
They're massive, over 50 core customers, 22,000 branches. It's like, wow. This deep dive is practically a window into the financial health of a huge part of India.
Okay, so let's jump right in. Let's open these reports up, start with the big picture. How did SBI actually do this past year, financially speaking?
Well, the first thing you see is their net profit. It's pretty impressive.
Okay.
They saw a jump of 21.59%, over 61,000 crore rupees.
Whoa.
That tells you right away. Profitable year, right?
Definitely grabs your attention. But I'm sure there's got to be more to it than just that one number.
Oh, absolutely. You can't just look at profit in isolation. To really understand what's going on, we got to break things down.
Right.
Look at net interest income, non-interest income. Those are key.
Okay, so let's start with net interest income then.
Yeah, that's like the heart of any bank's business, you know.
Right.
It's basically what they earn on loans minus what they're paying out on deposits.
So it's really the core of their lending activities, right?
Yeah.
How'd that look for SBI?
Really strong.
Good.
Their net interest income shows healthy growth, which tells me the lending environment's good and they're managing their margins well.
Makes sense. So that's the lending side. What about all those other ways banks make money nowadays? Fees, commissions, all those extra services.
Right, that's where non-interest income comes in. For SBI, it's not as big as their net interest income, but it's still important, adds up to a lot.
Okay.
This is good because it means they're not just relying on one thing, they're diversifying their income streams.
Right, so it's like having multiple engines powering their financial performance.
Uh,
But for investors, there's got to be that one number. They're all watching earnings per share, right?
You got it. EPS, earnings per share, is the key metric for investors. It tells them how much profit is tied to each share of the company's stock.
Right.
And for SBI, that EPS has also gone up nicely, which lines up with the overall profit growth we've been talking about.
So good news if you're holding SBI stock, it seems. But let's go beyond just the profits now. What about the quality of their assets, their loan portfolio? That can tell us a lot about the risks they're taking, right?
Absolutely. That's where we look at the non-performing loan ratio, the NPL ratio.
Right.
It's basically the percentage of loans that aren't being repaid as agreed. So it's like a measure of the riskiness of their lending.
I'd imagine a lower NPL ratio is a good thing then.
Exactly. Lower NPL, better risk management. And for SBI, their NPL ratio has actually been going down.
Oh, that's good.
Yeah, it means their loan portfolio is getting healthier.
So what's been helping them improve their asset quality like that?
Well, a few things. Back in 2016, India implemented the Insolvency and Bankruptcy Code. That's been huge for banks, helps them recover bad loans way more efficiently.
Okay.
Plus, SBI has been proactive internally, too. They've been tightening up their risk management practices, making sure those loan recovery efforts are running smoothly.
So it's not just external factors. They're taking action themselves to manage that risk better. That seems pretty smart, especially with everything changing so fast in the financial world these days.
Oh, for sure. A strong risk management system, that's crucial for any financial institution, but especially for one as big and important as SBI.
Now, our listeners are probably wondering about capital adequacy. You hear that term all the time, but what does it actually mean in practical terms?
Think of it like this capital is the foundation of a bank's stability. It's their cushion to absorb losses, like a financial shock absorber. More capital, better prepared they are for anything unexpected.
Okay, so like a safety net. But how do we actually measure capital adequacy?
We use what are called capital ratios.
Right.
They compare a bank's capital to its risk-weighted assets.
Okay.
It's a way to see if they've got enough capital to handle potential losses from their lending activities.
So higher capital ratio, generally good thing then.
Absolutely. Higher ratio means stronger financial position, bigger buffer against potential losses. Regulators actually set minimums for these ratios, and SBI has consistently been above those requirements.
That's reassuring. But capital adequacy is just one side of the coin. What about leverage, how much debt a bank is using? That seems like another big factor in how healthy they are financially.
You're right. Leverage is important. It's powerful, can really boost returns, but it also bumps up the risk. SBI, like any bank, uses leverage to increase their profitability. But gotta be careful. Too much leverage and things can go south quickly if those investments don't pan out.
So it's all about finding that right balance, using leverage strategically without taking on too much risk. How's SBI doing on the leverage front?
Well, their annual report has all the details on their debt-to-equity ratio, which is a key way to measure leverage. We can dig into those specifics and get a clearer picture of how they're managing their borrowing and how that affects their overall risk.
All right, so we've covered a lot already from net profit and income sources to asset quality and capital adequacy. But there's another big piece we can't forget, liquidity. How easily can SBI access funds to cover those short-term obligations? That's what we'll explore next.
Yeah, liquidity, that's the lifeblood for a bank like SBI. It's all about being able to meet those short-term financial obligations. Making sure they've got enough cash on hand to run their day-to-day operations, pay their debts, and handle any sudden withdrawals.
So it's about making sure they don't get caught short if there's a sudden need for cash. What are the key things we can look at to assess SBI's liquidity?
One of the big ones is the liquidity coverage ratio, the LCR. That measures the bank's high-quality liquid assets against their projected cash outflows over a 30-day period. It's like a stress test to see if they've got enough easily accessible funds to handle a short-term crisis.
Okay, so a higher LCR means more confidence in SBI's ability to ride out a financial storm. What about their funding sources? Where do they actually get the cash to maintain that liquidity?
Customer deposits, that's a major funding source for any bank. SBI is no different. But what's interesting is that they haven't stopped there. They've diversified their funding sources, tapped into what's called wholesale funding.
Wholesale funding, that sounds a bit more complex. What does that entail?
It's basically things like borrowing from other banks, issuing debt securities in the market, and accessing funds from institutional investors. The idea is to spread the risk, not rely solely on those customer deposits.
So like a diversified investment portfolio, but for their funding. That makes sense. Their report actually highlighted this diversification as a positive.
Yeah, it's seen as a sign of their commitment to being financially resilient, being able to handle different market conditions. They're not putting all their eggs in one basket.
That's a good transition to our next topic, operational efficiency. For a bank as gigantic as SBI, managing costs and maximizing efficiency must be a constant battle. How do we evaluate how they're doing on that front?
Well, we can look at a few key metrics. One is the cost-to-income ratio. Basically, it compares their operating expenses to their operating income. The lower that ratio is, the better they're doing at controlling expenses while generating revenue.
So it's classic efficiency maximizing output while minimizing input. Where does SBI stand on that?
Their cost-to-income ratio has been getting better, showing they're getting more efficient at managing their massive operation. That's a good sign, has a direct impact on profitability.
And speaking of profitability, we can't forget those classic indicators. Return on assets, ROA, and return on equity, ROE.
Right, those are key. ROA shows us how well SBI is using its assets to generate profit, while ROE focuses on how efficiently they're using shareholder equity to do the same.
Okay.
These are like report cards for management, how effective they are at creating value for the bank and its investors.
Feels like we're giving SBI a full financial health checkup. But beyond all these numbers, there's a whole other layer we need to consider: risk management. In today's world, things are so unpredictable. How is SBI handling the complex landscape of potential risks and uncertainties?
Risk management, oh, that's essential in the financial industry. Geopolitical stuff, market volatility, even cyber threats. SBI has to be ready for anything. Their annual report goes deep into their risk management framework, how they identify, assess, and mitigate all these various risks.
So it's not just reacting to crises, it's about anticipating and preparing for them. What are some of the specific strategies they're using?
Being proactive is huge.
Right.
They've got sophisticated models. They're using data analytics to pinpoint vulnerabilities, stress testing their systems. They're also putting serious effort into cybersecurity, making sure customer data is safe and they're protected against attacks.
Sounds like a multi-pronged approach. Financial, operational, technological risks. They're covering it all. What about hedging strategies, those techniques, to offset potential losses from market fluctuations? Are they using those?
Hedging is definitely part of their risk management strategy. They use derivatives and other financial instruments to reduce their exposure to things like currency fluctuations, interest rate changes, and general market volatility.
So like creating a financial cushion for those unexpected market swings. What about the future, though? Banking's changing so fast, technology's playing a bigger and bigger role. What does SBI's roadmap look like? What are their strategies for keeping up with this evolving landscape and continuing to grow in the years to come?
Their annual report gives us some clues about what they're thinking. Digital transformation is a big focus. Initiatives like their Yono platform that's all about improving customer experience and expanding their digital reach. Sustainability is another priority, with things like green bonds and incorporating sustainable practices into their lending.
Sounds like a bank that's not standing still. They're actively shaping their own future.
Exactly. They're facing the challenges and opportunities head on. Their future strategies really show that forward-thinking approach.
Well, we've covered a lot. There's strong financials, diversified funding, commitment to risk management, and these exciting plans for the future. But let's dig a little deeper into some of those future strategies, especially their digital transformation journey and their move into the world of sustainable finance. Okay, so we've seen how well SBI has been doing financially, how proactive they are about managing risk, but now let's dive into those future-focused strategies they're working on. Let's start with their digital transformation. It seems like every bank is talking about going digital these days, but what is SBI actually doing that's different?
Well, their Yono platform is a big part of that. It's more than just a simple banking app. They want it to be a whole digital financial ecosystem.
I've seen those ads with MS Dhoni, but I'll admit, haven't really used it myself.
Okay.
What makes Yono stand out from other banking apps?
SBI has packed it with features, really trying to make banking easier and more accessible. Customers can do pretty much everything on there, basic transactions like transferring funds, paying bills, but then also more complex stuff, investing in mutual funds, applying for loans, even shopping online.
So they're aiming to be that one-stop shop for all things finance, all within one app. Are people actually using it, though?
Oh, yeah.
Good.
The report shows they've brought in a ton of new customers through Yono, and the transaction volume is huge.
Okay.
It's clear that they're doing something right to engage customers and expand their digital presence.
That's smart, especially with how fast customer expectations are changing when it comes to digital. But Yono's just one piece of the puzzle, right? What other digital initiatives are they working on?
They're investing a lot in building a strong tech infrastructure to support all this.
Right.
For example, they've developed their own private cloud. They call it Megdut.
Megdut. That's an interesting name. Is there a story behind that?
Yeah, it's actually pretty fitting. In Hindu mythology, Megdut is this cloud messenger.
Oh, okay.
And in a way, that's what SBI's private cloud is doing, allowing for fast and secure communication across their huge network.
I see the connection.
Yeah.
So this cloud infrastructure is like the backbone of their digital operations.
Exactly. It's hosting hundreds of their applications, including crucial stuff like UPI payments, kiosk banking, even their loan management system gives them more control, flexibility, and security.
That's impressive. Sounds like they're really building the foundation for a digital-first future.
Yeah.
But let's shift gears a bit now. Talk about their sustainability initiatives. You mentioned green bonds earlier. How big of a deal is that for SBI?
It's a key part of their sustainability strategy. They've already raised a good amount of capital through green bonds, and they're actively promoting them to investors who are looking for eco-friendly investments.
So they're tapping into that growing demand for sustainable investment options. But it's more than just raising capital, right?
Yeah.
What other steps are they taking to make their operations more sustainable?
They're incorporating sustainability into their lending practices. Like, they're encouraging customers to go for solar rooftop systems by integrating those into their home loan products. They're also giving lower interest rates to builders who prioritize sustainable building practices.
Those are smart incentives for both individuals and businesses to go green. It shows they're serious about putting their money where their mouth is when it comes to sustainability. But they're also deeply involved in financial inclusion efforts, right?
Absolutely. Financial inclusion, giving underserved communities better access to financial services, that's always been a priority for SBI. They've got various programs to reach rural populations and help small businesses.
Their report mentioned a program called PayasBlownIn59minutes.com. What's that about?
It's a perfect example of using technology for financial inclusion. It makes the loan process way easier for small and medium businesses. It uses data analytics and algorithms to assess creditworthiness quickly so eligible businesses can get in-principle loan approvals in minutes.
That's huge for those businesses, especially those who might have had trouble getting traditional financing. It's great to see SBI using its size and resources to make a real difference, not just for themselves, but for the community as a whole.
Yeah, their journey really shows how financial institutions can be forces for both economic growth and social good.
Well, this deep dive into SBI has been really insightful. We've learned about their financial strength, their focus on digital, their commitment to sustainability, and their dedication to financial inclusion. They're not just a bank. They're shaping India's financial landscape, working towards a more sustainable and inclusive future.
It's been fascinating. Hopefully your listeners have learned something new about the world of SBI.
And with that, we wrap up this episode of The Deep Dive. Keep exploring and stay curious.